Hello everyone, this is ACC Amit Kumar and I will discuss with you mock test paper of October 2020. I will be discussing with you the consolidated balance sheet question. Consolidated balance sheet preparation and how we are going to do it in 5 steps. So I shared with you the 5 steps previously, that is group structure, working note number 2, net assets of subsidiary, on date of acquisition, date of balance sheet. Working note number 3 is calculation of goodwill. Working note number 4, non-controlling interest valuation. And working note number 5, group retained earnings. So I have shared in the past as well that how to consolidate or prepare consolidated financial statements in 5 steps. If you remember these 5 workings, you can easily perform a consolidated balance sheet question. So which is possible. So we'll have a look at this mock test paper of October 2020 shared with you. So I'll directly try to do that question relating to it. So if you look at the question, always read the requirement. Like whenever you begin attempting any question, always read the requirement. The requirement in this question is that prepare the consolidated balance sheet as on 31st March 20 of the group of entities PN Limited and SR Limited. That means in the group structure, PN Limited is the parent, SR Limited is the subsidiary, and the date of balance sheet is 31st March 20. The first thing in any question we need to clarify is the group structure. In this case, in this group structure, PN Limited is the parent, SR Limited is the subsidiary. The percentage acquired is 70%. NCI has a share of 30%, and date of acquisition in this investment is 1st October 2019. 1st October 2019 is the date of acquisition. Date of balance sheet is we need to prepare the balance sheet of 31st March 20. 31st March 20 is the date of balance sheet. 31st March 2020. So once the group structure is identified, the second thing which is important is we need to know the net assets of subsidiary. Net assets of subsidiary we need on 2 dates. One is date of acquisition, that is 1st October 2019, and date of balance sheet is 31st March 2020 is the date of balance sheet. You can mention directly the dates there so that there is no confusion. We need the net assets subsidiary on these 2 dates. In it, if you look at the net assets figure, the share capital of subsidiary is mentioned as 624,000. Share capital of subsidiary mentioned as 624,000. Date of balance sheet, it is 624,000. Then there are other reserves which are standing at 312,000 on date of balance sheet. Other reserves are standing at 312,000 on the date of balance sheet. Retained earnings position is 255,800. Retained earnings position. So this we can copy directly from the balance sheet. Retained earnings position on 31st March 20 is equal to 255,800. 255,800 is the retained earnings position. Then there are trade payables and short-term borrowings that are part of the liabilities. So this is the net assets position is 624, 312, 255,800 is the net assets position. Date of acquisition, retained earnings, other reserves. We'll have a look. The retained earnings of SR Limited showed a credit balance of 93,600 on 1st April 2019, out of which there is a dividend paid of 12% on 15th December 2019. So this will come back. We need to calculate it. We'll calculate it through a working that what is the position of retained earnings on date of acquisition, because since there is a dividend paid, there is an earning earned throughout the year, we need to know what is the retained earnings position on 1st April 2019. It is given 93,600, but what is the position on 1st October 2019, that we need to calculate. So we'll come back to this calculation later. Other than that, there is a fair value of plant and machinery. So there are fair value adjustments. Fair value adjustments. In the fair value adjustments, we have plant and machinery, which we need to calculate on the date of acquisition as well as on the date of balance sheet. Now this plant and machinery is included as part of SR Limited at 421,200, but its fair value on the date of acquisition was 624,000. So that means whatever was the carrying amount, there is an increase in the fair value. This is the final amount. We are not directly given the increase in the fair value. So we'll need to calculate this. We'll be calculating these two amounts. What is the fair value on the date of acquisition and what is the depreciation charge on this amount, on the increased amount. These two are pending. Then we get to know that following are the increases on comparison of fair value. Now these are the amounts which are direct increase in fair value. For plant and machinery, the fair value of plant and machinery on 1st October 2019 is given, not the increase in the amount. So we need to identify how much is the increase, since they have included some amount as part of the balance sheet. 421,200 is included as part of the balance sheet. So we need to worry about only about the increases. How much is the total increase in the value of plant and machinery from the carrying amount on this date? That increase will be taking into account on the date of acquisition. So this will be calculating. Following are the increases on comparison of fair value as per respective Ind AS with book value as on 1st October 2019. Now these are the amounts which are higher by an amount of 312,000. Land and building are increasing by 312,000. So whatever is the carrying amount, the carrying amount is already including here. 561,600 have already included the book value. What they have not included is the increase in land and buildings. So the increase in land and buildings will be including on the date of acquisition as 312,000. Inventories as 4,600, 46 inventories as 46,800. Then we'll include trade payables as 31,200. Trade payables will be reduction. It will be minus 31,200 because we are calculating the net assets. In net assets, these are increasing the assets value, trade payables are reducing the assets value. On reading further, we get to know that inventory is still unsold on balance sheet date and the trade payables are not yet settled. If they are not settled, that means inventories are also standing at the same amount, 46,800, and trade payables minus 31,200. Other reserves as on March are the same as was on 1st April 2019. So the other reserves which are presented on the date of balance sheet at 312,000, they were the same on date of acquisition as well, 312,000. Land and building, since there is no information, we will assume there is no depreciation on it. So 312,000 is the value of land and building. So what is yet to be calculated is the retained earnings position on date of acquisition. We need to know, and we need to know the plant and machinery position. So first We'll have a look at the retained earnings. Retained earnings as on 1st October 2019. We need to know this position. We know the balance as on 1st April 2019, which is given to us as retained earnings balance position is given to us as 93,600. 93,600 is the balance on date of acquisition. Balance as on 31st March 2020 is given as balance as on 31st March 2020 is given as 255,800. 255,800. There is a dividend paid during the year. Dividend paid during the year is equal to 12% dividend was paid on 15th December 2019. Dividend paid on 15th December 2019. So the dividend paid is actually 12% of equity share capital is 624,000. 624,000 equals to 12% of 624,000, 74,880. So that means total increase in earnings or total earnings if dividend was not distributed, would have been equivalent to 255,800 plus 74,880. Total increase in earnings during the year. Total increase in earnings during the year. So if you compare it with the opening balance, we get to know the increase in earnings. 330,680 minus the opening balance. This is the total increase in the earnings. So the retained earnings position as on 1st October 2019 or the earnings for the period 1st April 2019 to 1st October 2019 is equal to this into 6 by 12 is the earnings during this period. So total retained earnings position as on 1st October 2019 is equal to the opening balance is 93,600 plus earnings during the year is 11,850. 212,140 is the retained earnings position on the date of acquisition. The balance at the opening of the year was 1st April 2019. The balance was 93,600. This is the balance at the end of the year. There is a dividend declared of 74,880. So that means total earnings during the year if dividend was not distributed is equal to 330,680. Till date this should have been the balance. So we get to know the total increase. Total increase is in comparison to the opening and the balance till date, this is increased during the year. And if this is increased during the year, 6 months earnings is 118540. If 6 months earnings are 118540, that means total retained earnings position on the date of acquisition 1st October 2019 is equal to 93,600 plus 118540, that is 212140. So one thing sorted, retained earnings position on 1st October 2019 is equal to 212140. Now we need to know the plant and machinery position. Plant and machinery carrying amount on 31st March 2020 is equal to 421,200. 421,200 is the carrying amount. Depreciation or gross amount is equal to 421,200 divided by 90 into 100. 421,200 divided by 90. 468,000 is the carrying amount at the beginning of the year. So carrying amount as on 1st April 2019 is equal to 468,000. Depreciation charge till 1st October 2019, since that's the day when it is acquired. So it is 468,000 into 10% into 6 by 12 is equal to 468,000 into 10% into 6 by 12 is equal to 23,400. So that means carrying amount as on 1st October 2019 is equal to 468 minus 23,400. Fair value of plant and machinery on 1st October 2019 is equal to fair value of plant and machinery of SR Limited as on 1st October 2019 was 624,000. The rate of depreciation is 10%. 624,000 is the fair value on the date of acquisition. So fair value increase is equal to 624,000 minus 444,600. 179,400 is the fair value increase. So one thing sorted, in case of land and building, in case of inventories, in case of trade payables, the fair value increase was given to us. The plant and machinery increase was not given to us. So we have calculated it as 179,400 is the fair value increase. Now in this fair value increase, there is a depreciation charge as well for the year. Since the fair value of plant and machinery has increased to 624,000, depreciation is on the revalued amount, that is 624,000 is the new value of plant and machinery. So depreciation charge for the period 1st October 2019 to 31st March 2020, it is 624,000 into 10% into 6 by 12 that is equal to 624,000 into 10% into 6 by 12. Total depreciation charge for the next 6 months is 31,200. Depreciation already charged. Depreciation already charged is that depreciation till 1st October 2019 was 23,400 and the total depreciation charged till date was 468 minus 421,200. 46,800 was the depreciation for the full year, and this was divided into half year depreciation from 1st April 2019 to 1st October 2019. It was charged as 23,400. The remaining balance depreciation which has been charged is 46800 minus depreciation already charged till this date is 23,400. So depreciation charge for the period is the difference, that is 31,200 minus 23,400 is the depreciation charge for the remaining period 7,800. So the carrying amount as on 31st March 2020 is equal to 1,79400 minus 7,800. So we got the balance of plant and machinery of 31st March 20 as 1,71600. We got the balance of plant and machinery with the fair value increase, that was 1,79400. And the third thing we needed was depreciation charge and retained earnings. So we had calculated the retained earnings position as 212,140. 179,400 plant and machinery we calculated on date of acquisition. Date of balance sheet plant and machinery is equal to 171,600. So the total balance of net assets on the date of acquisition is equal to 1655140, and net assets position on the date of balance sheet is 161,000. Post acquisition profit from subsidiary is equal to 1,691,000 minus 1655140, in which parent share is 70% of 35,860. We'll be presenting it in working note number 5. NCI's share, that is 30% of 35,860. We'll be presenting it in working note number 4. So total amount to be divided is 70% of 35,860 and 30% of 35,860. This is the amount to be included in working note number 4 and working note number 5 as post acquisition earnings. So working note number 1 was group structure. Working note number 2, we need net assets of subsidiary on date of acquisition, date of balance sheet, and there are two major workings, which was one was retained earnings position on the. So these were the major workings which I am highlighting the boxes. This plant and machinery, position on date of balance sheet. These are the major workings. Working note number 3. Working note number 3 is calculation of goodwill. So for calculation of goodwill, we need purchase consideration. Purchase consideration figure we get to know from investment in SR Limited. Purchase consideration is 1248,000. So we have purchased this investment in subsidiary. This gets replaced with goodwill. So when we consolidate PNN SR Limited, when we consolidate, this gets replaced with goodwill. So 1248,000 is the purchase consideration. In this, we need to add value of NCI and we compare it with fair value of net assets of subsidiary. Fair value of net assets of subsidiary we get to know from working note number 2. It is equal to fair value of net assets of subsidiary is 1655140. 1655140. Value of NCI is 30% of 1655140 is the value of NCI, which equals to 1655140. It is 496542 is the value of NCI. Total net assets position is 1,248,000 plus 496542 minus 1655140. 89402 is the calculation of goodwill. Is the value of goodwill. Working note number 4 is non-controlling interest valuation. Non-controlling interest valuation. So for that we need value of NCI on date of acquisition. On date of acquisition, which we just concluded in working note number 3. It is equal to 496542 plus share of profit of NCI. This we calculated in working note number 2, which is equal to share of profit of NCI. We calculated as 10758. This is the value of NCI as on 31st March 2020. Working note number 5 is group retained earnings. And the group retained earnings, we need to include parents' earnings. Parents' earnings is given as retained earnings. Parents' earnings is 178,400. 178,400 plus share of profit from subsidiary. Share of profit from subsidiary we just calculated in working note number 2. It turns out to be equivalent to share of profit from subsidiary turns out to be equivalent to 25102. $203,502 is the group retained position as on 31st March 2020. Group retained earnings position as on 31st March 2020. NCI 507300. Goodwill is 89402. These are the major calculations. And net assets of subsidiary on date of acquisition and date of balance sheet is equal to 1655, 140 and 1691. This we calculated earlier. We know the group structure position now. So these are the 5 workings, and in these 5 workings we have been successful in knowing the group structure, knowing the net assets of subsidiary on date of acquisition. This balance of net assets of subsidiary on date of acquisition helped us to calculate the value of goodwill. This, when we valued NCI, the same value supported us in calculation of date of balance sheet NCI 496542, and post acquisition profit from subsidiary 25102 we got to know from this working. In this, the main things which required to be calculated was retained earnings position on date of acquisition, which required some thought. Another area which required some thought was plant and machinery valuation, that how much was the increase on the date of acquisition, and the depreciation on the increased amount for the next 6 months. So now finally we can present consolidated balance sheet as on 31st March 2020. We'll be presenting consolidated balance sheet. We'll present it with the same headings and subtotals which we used. Assets. Among the assets we have non-current assets. Among the non-current assets we have land and building. We have plant and machinery. Investment in SR Limited gets replaced with goodwill amount. Goodwill amount, working note number 3, is equal to 89402 is the amount of goodwill. Then among the current assets, it is inventories, trade receivables, cash and cash equivalents. So land and building is 468. So let's total them first, the asset side, and then we'll see the other area. Land and building is 468,000 of PN Limited, 468,000 of PN Limited plus 561,600, 561,600 plus land and building position on the date of balance sheet, which increased, was 312,000. 312,000 was the increase in value. So we'll add 312,000 here. 468 plus 561 plus 312,000 can refer to working note number 2. Next is plant and machinery, 748,800, 748,800 plus 421,200, 421,200 plus plant and machinery value increase on the date of balance sheet is equal to 171,600 plus 171,600 working note number 2. This is equal to 748800 plus 421200 plus 171600 is 1341600. The total of land and building is equal to 468,000 plus 561,600 plus 312,000. Goodwill is given to us. Then among the inventories we have 374,400 plus 113,600 plus inventories value on date of balance sheet is 46,800. 46,000 is the inventories valuation on date of balance sheet. 46,800 can refer to working note number 2. Trade receivables 186,500 plus 124,800 plus trade receivables. There is no increase or decrease mentioned, so this is equivalent to this amount only. And in cash and cash equivalent was 45,200 plus 24,900. So the total balance we have got is 374400 plus 113,600 plus 46,800. The total of trade receivables is equal to 186,500 plus 124,800. Cash and cash equivalent 45,200 plus 24,900. So the total value of the total assets position is equivalent to 36,88802 is the total assets position. Next part is equity and liabilities. Equity and liabilities. Among the equity and liabilities, we can include only share capital of parent only. So equity share capital of parent only, which turns out to be equivalent to 1560,000. The reserves position was also same. It was same on the date of acquisition. It was same on the date of balance sheet. That means we have acquired the reserves 312,000 of the subsidy. So the reserves will also be of the parent only. Other reserves will also be of parent only, which is equivalent to 936,000. Then there is group retained earnings. Group retained earnings, we get it from working note number 5. Working note number 5 is equal to the retained earnings position is 203,502 is the group retained earnings. Then we need non-controlling interest. Non-controlling interest is working note number 4. It is equal to NCI valuation is 507,300. Then there are trade payables. So among equity and liabilities, this is the equity portion. Among liabilities, there are no non-current liabilities, only current liabilities. Among the current liabilities, it is trade payables. Trade payables increased by 146,900 plus 34,300 plus there was an increase in payables in working note number 2. Increase in payables was 31,200 was the increase in payables. $31,200 was the increase in payables. Can I afford to working note number 2? Total 146,900 plus 34,300 plus 31,200 is the increase in trade payables. Short-term borrowings. Short-term borrowings is equal to 249,600 plus 20,000. This is equal to 249,600 plus 20,000 is 269,600. If I do total equity and liabilities, total equity and liabilities, it turns out to be equivalent to 36,888,02. 36,888,02. So we have been successful in preparing consolidated financial statements. This is how we prepare consolidated balance sheet as on 31st March 2020. So we'll add up land and building. If there's an increase in land and building, we'll include it here. Plant and machinery, increase in plant and machinery on the date of balance sheet position will include. Goodwill we calculated through working note number 3. Inventories we added the increase. Trade receivables was same. There was plant, there was the balance related to parent and subsidiary we added up. There was no increase. Cash and cash equivalent same position. Equity share capital of parent only will include. Other reserves were same or parent only. Again parent only, since 312,000 we have acquired on the date of acquisition. Group retained earnings will get to know from working note number 5. Non-controlling interest from working note number 4. Trade payables, there was an increase in trade payables, 31,200. Rest we simply need to add P plus S. So these were free marks available with us. So this is how we use the 5 workings in preparing consolidated balance sheet question. So we just did a mock test paper of October 2020, wherein if we remember these 5 workings, we can easily calculate or prepare consolidated balance sheets. If I look at it again, we looked at the working, and while reading the question, like the first thing, as I always say, is read the requirement. We need to prepare consolidated balance sheet. In preparing consolidated balance sheet, if we look at the line items, when we do consolidation, we'll have to add land and building P plus S, that is parent plus subsidy. plant and machinery, parent plus subsidy. These line items will be appearing onto the consolidated balance sheet. This investment in subsidy will get replaced with goodwill, or may not even appear if it is bargain purchase goodwill. Inventories will be appearing P plus S, trade receivables, cash and cash equivalent. So these line items will be appearing onto the balance sheet. On the equity and liability side, it will be equity share capital of parent only. Since equity share capital of subsidiary gets cancelled with this investment in SRL, and any differential amount is the goodwill which is presented. Other reserves, this 312 got cancelled with this investment in SR Limited. This got cancelled with each other, and only 936,000 will be included as part of consolidated balance sheet. Retained earnings, we calculated the group retained earnings with parents earnings plus post acquisition share of profit. We added trade payables, we added parent plus subsidy and any increase in payables. Short term borrowings, parents borrowings plus subsidies borrowings are added. This is how we present consolidated balance sheet. Now, using this information is the reason working one is important, that we know the group structure, who is the parent, who is the subsidy. PN Limited is the parent, SR Limited subsidy, NCA was 30%, date of acquisition was 1st October. So it was in the middle of the year, so there was a gap of 6 months between date of acquisition and date of balance sheet. Working note number 2, net assets of subsidy on date of acquisition, date of balance sheet. So this share capital we could pick from the information available. 624,000 is the share capital, date of balance sheet same amount. Other reserves we could pick from the date of balance sheet 312,000, 255,800. So 312,000, 255,800 we could directly pick up from the balance sheet provided. This 312,000 we included when it was mentioned that other reserves as on 31st March 20 are the same as was on 1st April 2019. When I read this statement, we included 312,000 in the other reserves on 1st October 2019. The retained earnings position, which was mentioned here as retained earnings position, showed a credit balance of 93,600 on 1st April 2019, out of which a dividend of 12% was paid on 15 December 2019. The retained earnings balance position is given as 25,800. So what we needed was, we had retained earnings balance position, we needed retained earnings position on the date of acquisition, that is on 1st October 2019. So we did this working for retained earnings balance. Retained earnings position on 1st April 2019 was given as 93,600. Retained earnings balance on 31st March 20 is given, which we picked it from here, 255,800. And there was a dividend paid of 74,880. That means the total earnings, if dividend was not distributed, was equivalent to 2,55,800 plus 74,880. This would have been the retained earnings position in normal circumstances if dividend was not paid. So we tried to know how much was the total increase in income during the year. We compared it with the opening balance of 93,600. We got to know that 2,37,080 was earned during the year. So if 2,37,080 was earned during the year, how much was earned during 6 months period? During 6 months period, the entity earned 118,540 was earned during 6 months period. If this was earned from 1st April 2019 to 1st October 2019, then what is the retained earnings position on date of acquisition, that is 1st October 2019, which turns out to be equivalent to opening balance 93,600 plus the earnings during the year till 1st October. That means the retained earnings position on 1st October 2019 was equivalent to 212,140. We needed this amount in net assets of subsidy on date of acquisition 212,140 on 1st October 2019. This is one thing we needed. Second we needed was plant and machinery. As on 1st October 2019 was 624,000. The rate of depreciation was 10%. But the plant and machinery included in the balance sheet was 421,200. That means there was an increase in the value of plant and machinery. So we needed to recalculate it. So we grossed up the amount 421,200. We grossed it up. So the plant and machinery amount on 31st March 20 included in the balance sheet is 421,200. Grossing it up, it turned out to be equivalent to 468,000 was the carrying amount without charging depreciation. So if we charge depreciation for 6 months period, depreciation till 1st October 2019, the depreciation charged is 23,400. If 23,400 is the depreciation charge, what is the carrying amount on 1st October 2019? It is 444,600 is the carrying amount After charging depreciation to an amount of 468,000, we charged depreciation of 23,400 and we got the carrying amount on 1st October 2019 as 4,44,600. But the fair value on the same date is equivalent to 624,000. That means there is a fair value increase of 179,400. For other items, land and building, inventories, trade payables, there was an amount of increase given to us. But for plant and machinery, we had to calculate how much is the increase in the value of plant and machinery. So we can include this increase in value of plant and machinery 179,400 as part of date of acquisition amounts. Fair value adjustments, increase in value of plant and machinery 179,400. Then we charge depreciation on this increased amount. We got to know that the depreciation was charged already for the period. There was a depreciation charge which was already charged. Was total depreciation charged in this amount was 46,800. Depreciation charged for the 6 months was 23,400. So how much depreciation must have already been charged from the period 1st September 19 to 31st March 2020, which was already included in this amount of 421,200. So depreciation charge was 23,400. What would have been the depreciation for the next 6 months? Since the fair value of plant and machinery is 624,000 and the rate of depreciation is 10%, 6 months depreciation is 31,200. 23,400 has already been charged. That means depreciation charged for the remaining increased value is 7,800. So if we wish to know the carrying amount or the balance, I would say balance increase of plant and machinery balance increase of plant and machinery as on 31st March 20. So if it was 179,400, there will be depreciation charge on this amount 179,400, depreciation charge of 7,800. We get the balance of 171,600. 171,600 is the plant and machinery balance on this date. Reading further, we have dealt with note 1, we have dealt with note 2, retained earnings, we have dealt with dividend received to its retained earnings. Now dividend received will automatically be adjusted because we are taking into account post acquisition earnings. So automatically whatever is the share belonging to parent and NCI will get distributed in working note number 4, that is value of NCI. Working note number 5, group retained earnings, it will be automatically adjusted. We dealt with working note number 4, value of plant and machinery, increase in value of plant and machinery, depreciation charge, and what is the balance as on 31st March 20. We dealt with the increase in value of land and building, inventories, trade payables as part of working note number 2. In working note number 2, then we calculated the retained earnings, we dealt with plant and machinery position, and land and buildings increase we have included 312,000, inventories 46,800 and 31,200. Land and building, inventories, trade payables, we included the increase in the fair value adjustments. Now reading further, we got to know that the inventory is still unsold on balance sheet date and trade payables are not yet settled. That means these are the same amounts on the date of balance sheet as well. Land and building, since there is no information given, we assumed it that there is no depreciation charged on it. So in spite of the increase of 312,000, we included it as non-depreciable component and we included 312,000 on the date of balance sheet as well, the same amount. So we got to know the net assets of subsidiary on date of acquisition, net assets of subsidiary on the date of balance sheet. So when we compare the net assets on the date of acquisition, date of balance sheet, if you look at any other note, other reserves as on 31st March 20 are the same as was on 1st April 2019. For this line is the reason we included the other reserves amount also same on date of acquisition and date of balance sheet. The business activities of both the company are not seasonal in nature and therefore it can be assumed that profits are earned evenly throughout the year. So since we read this line is the reason we spread the earnings evenly, assuming that we have earned 118,500 evenly over the year is the reason this was the earning for the 6 months period. Same logic will be applying here, that post acquisition profits are the difference between 1691,000 minus 1655,140. The total post acquisition profit from subsidiary is 35,860 when we divide, parent share is 70% of 35,860, NCI share is 30% of 35,860. So this will be included as part of group retained earnings in working note number 5. This will be included as part of NCI share in working note number 4. This is how we'll deal with working note number 2. Now the value calculated in net assets of subsidiary on date of acquisition, that is 1st October 2019, an amount of 1655140. This we need for calculation of goodwill. For the calculation of goodwill, we'll need the fair value of net assets of subsidiary on the date of acquisition. So we'll need this figure in calculation of goodwill. So when we are calculating goodwill, we'll need purchase consideration. This purchase consideration figure we got to know from the balance sheet. Purchase consideration investment in SR Limited. That means the total amount spent is 124,800. There could have been more information in the notes, but there was no information regarding it. So we assume that this is the amount, or this is clearly given to us that this is the amount paid to acquire the subsidiary. So 124,800 is the amount paid to acquire the subsidiary. The value of NCI will be 30% of the value of fair value of net assets subsidiary on date of acquisition. This is known as a proportionate basis value of NCI. Proportionate basis valuation of NCI. So fair value of net assets subsidiary on date of acquisition. Fair value of net assets of subsidiary on date of acquisition, we get to know from working note number 2, and we pick it from here, 1655140. We get to know net assets of subsidiary on date of acquisition, that is 1st October 2019. The value is 1655140. We include it here. This is the fair value of net assets subsidiary on date of acquisition, 1655140. A proportion of it belongs to NCI. That means 30% of this amount belongs to NCI. 496542 belongs to NCI. 30% of 1655140. So the difference is goodwill. Goodwill means 124,800 plus value of NCI. So this is representing 80%. Sorry, this is representing 70%. This is representing 30%. And the fair value of net assets of subsidiary is representing 100%. We got to know the value of goodwill. So once we have the value of goodwill, we need the value of NCI. Now value of NCI on date of acquisition we have already calculated. This same value will be using in working note number 4. So value of NCI on date of acquisition, we can pick it up from working note number 3. And when we pick it up from working note number 3, the value we get is 496,542. Share of profit of NCI is equal to working note number 2. We get this figure from the share of profit we allocated to parent and NCI. So when we calculated the net assets of subsidiary on date of acquisition, date of balance sheet, we got to know the difference. The difference is 35860. We gave a share to parent 25,102. We gave a share to NCI 10758. This will be needing in working note number 4. So when I am calculating working note number 4, I need value of NCI on date of acquisition. This we got from working note number 3, 496,542 plus share of profit of NCI working note number 2 is 10758. We get to know the NCI's position on 31st March 20. This will be including as part of the balance sheet. This goodwill amount will be including as part of the balance sheet. Group retained earnings is parents' earnings. We got this figure from parents' earnings. We got this figure from 178,400 from the balance sheet of parent plus share of profit from subsidiary. We get to know from working note number 2, 25102. We calculated just earlier, and the total balance of group retained earnings on 31st March 2020 is equal to 203,502. So once these workings are done, if there is any other note given, we could have given a working note number 6, 7, 8 to it. So consolidated balance sheet as on 31st March 20, asset, non-current assets, land and building, parents land and building is 468,000 plus subsidiaries land and building is 561,600. Subsidiaries land and building has increased by 312,000. Plant and machinery 7,48,800 plus 421,200 plus plant and machinery increase in subsidiaries net assets is 171,600. Goodwill we calculated from working note number 3. We will pick it directly from working note number 3. Current assets inventories are higher by 46,800. Parents inventories are 3,74,400 plus subsidiaries inventories are 113,600. Total balance 534,800. Trade receivables free marks, parent plus subsidy, cash and cash equivalent, I would call it free marks, and the total of assets is 36,888,02. In case of equity and liabilities, equity share capital of parent only, because share capital of subsidy, other reserves of subsidy gets cancelled with investment in subsidy. Is the reason investment in subsidy is not included on the debit side. We only included the goodwill amount, because investment in subsidy cancelled with the share capital of subsidy and other reserves. Then we have group retained earnings. Group retained earnings is representing parents' earnings plus post acquisition earnings only. So parents' earnings was 178 something, 178,400. Post acquisition earnings of subsidy 25,102 were added to it, and we got group retained earnings. Non-controlling interest valuation 507,300 is the value of NCI on date of acquisition plus share of profit of NCI. So we'll be including it separately. So these are the new line items included as part of equity and liabilities. On the liability side, we have trade payables. So there was an increase in trade payables of 31,200. Parents trade payables were 146,900. Subsidies trade payables were 34,300. Total being 212,400. Short-term borrowings 249,600 plus 20,000. So when we total up, we get 36,888,02 is the total of equity and liabilities. Now this is the best situation for any accountant on earth. I think it's time for distributing sweets, that we have been successful in reaching the conclusion that our total assets are equaling total equity and liabilities, that is 36,888,02. This is how we'll be preparing and presenting consolidated balance sheet. To learn more insights on Ind AS, you can have a look at my special classes and the courses which are available on Unacademy. You can use the code ACCA Amit to subscribe any course on Unacademy. Use the code ACCA Amit and follow me on Unacademy. So my name is ACCA Amit Kumar, and I've been training on IFRS and Ind AS since 10 years now, and I worked with various corporates in last 10 years. I was part of a parent corporation, XSS Consulting. I was leading IFRS trainings at KPMG for 3 years and had a brief stint with 3MF Group. Till recently, I was a director with Accounting Advisory Services BDO India, and currently I'm serving as a founder and CEO of Promisha Business School at Dehradun. I'm offering UK Chartered Accountancy Qualification ACCA and teaching chartered accountants on the subject of diploma in IFRS. So here's a chance to be with CA final students, to share insights on Ind AS and help them in securing very good marks in their financial reporting paper. So this is all for the day. Thanks for your valuable time. See you again.